45 years, zero name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
We're going to get started here. It's a pleasure to be presenting today. My name is Tasso and I'm on with Wade, and we have a very exciting topic to go over, and that's Nashville, Tennessee, the city of music and a really thriving real estate market. I was just out in Nashville all last week hanging out with Wade and the team there. So it's super cool to be coming out just fresh on that market. And Wade is a fantastic realtor in the area, and we're really excited to get started on this presentation and go into detail on kind of the time we spent out there. Wade and I attended some great networking events and met with realtors, builders, looked at a lot of new construction, and we're excited to be going into detail here. So let's hop right in.
Great. Thank you, Tasso.
Yeah, thank you, Wade. We're excited to have you on. So my name is Tasso Spathos. I have been with the company for just about 2 years now. I'm a licensed realtor. I have a bachelor's in business administration from Cal State University, Long Beach. I have 2 years of direct property management experience. I am a Husky owner, a student pilot, and I love to play basketball. I've completed real estate transactions in California, Texas, Tennessee, and Kentucky, and I am invested in our Marshall Reddick mortgage fund, which we'll go into in just a minute here. So I'm seeing a lot of new faces on our webinar, which is great, but we have some existing clients. And this is us. We're Marshall Reddick. We are there are 4 divisions within our company, but we'll start with the first one, and that's a full service real estate brokerage. So we help our clients buy and sell their primary homes as well as investment property. Nationwide, we did around 600 transactions last year, 90% of which we currently manage, which brings us into our second division, and that's our property management company. So we take care of absolutely everything for the landlord, from maintenance to leasing, renovations, rent collections, and really everything, so that all you guys have to do is focus on collecting your rent checks at the end of each month. Our third division is our private money lending. So sometimes when you can't qualify for conventional financing, you need private financing, and that's where Marshall Reddick steps in. We provide non-owner occupied recourse loans to borrowers doing fix and flips, new constructions, or even purchasing investment property. And then our fourth division is what I mentioned on the last slide, is our mortgage fund, our investment fund. So the same way you can own real estate and collect rent checks, you can invest in our mortgage fund and collect mortgage payments. So like I mentioned, I'm personally invested in our mortgage fund and collect our quarterly disbursements. I log on to the quarterly update webinars. I just hosted one with our director of private lending, Pat Prunty, that can be found on our website, where we gave an in-depth on what that mortgage fund looks like. And it was just a fantastic quarter. It's yielding around an 8.5% annual return, which is great given that the stock market has kind of been a little shaky. But it's a fantastic option for our clients to kind of diversify their portfolio. So this is Marshall Reddick, and these are our 4 divisions. Super exciting. Like I mentioned, I was just in Nashville all last week with Wade and our team out there, and it was a great time. So the topics we're going to be covering today is Nashville is an undervalued market. There's a lot of unturned stones that we're going to be going over. Wade and I have done a lot of research and are going to kind of be talking about the hidden gems in certain pockets. The surrounding suburbs to Nashville. We're going to be going over our Tennessee team in our office and what sets us apart. We're going to be going over the advisor role, the realtor role, and the transaction in general. So we're not just a real estate service that will help you buy the home and then turn around and not talk to you again. No, we'll actually go ahead and take initiative and manage the property for you thereafter. And that's going to tie into our property management footprint in Nashville. And then we're going to be going over Nashville's growth. Now and future. Like I mentioned, Wade and I attended an in-person event which was called Nashonomics, that actually had a lot of fantastic speakers. We had a lady from the Fed come by and talk about how Nashville has been impacted by the growth and what we can expect. We had some fantastic speakers from NAR, National Association of Realtors. So it was a great experience. We met a bunch of local contractors and prominent players in the Nashville area. And then we're going to be going over, which is, the most exciting part, example of properties and performas and what to expect in the Nashville market right now. What we expect and hope from you as attendees is we hope you learn something from this event tonight. So please feel free to take out your iPads, computer, notepad, and write down everything that we go over here. Ask questions in the chat. If you navigate towards the section where you can type, you can feel free to type any questions. Wade and I are fantastic about stopping and going through questions. We'll also have a small section for Q&A at the end of the webinar. If there is an in-depth question you guys want some more clarity on, you can feel free to write it down as well, and we can discuss it in a one-on-one that's more custom versus these webinars that are very tailored to just the whole Nashville market in general, but our one-on-ones, what they look like is they're very personalized. So please feel free to write down questions. If you see QR codes or special links, feel free to grab a hold of those and visit them later in the presentation or during. And always remember that this presentation is being recorded and will be available along with the slides, just give or take 24 hours after its completion. So again, Marshall Reddick, we kind of talked about our 4 divisions, and here is just an outline of our national footprint. I am broadcasting live today from our Newport Beach office here on MacArthur. We also have an office up in Los Angeles in the Pasadena area. Moving over to Texas, we have 5 offices, so one of our bigger markets, our biggest market actually, San Antonio down south, New Braunfels in the middle, and Austin. Those are all connected by the I-35 corridor, which is great. So we can take one freeway to all 3 of our offices there. I've been to all of them. They're fantastic, and one of the largest property management portfolios is in right around those metros. Our Houston and Dallas offices are our newer offices, so we're seeing a lot of expansion in both property management and realtors completing transactions in those areas. There are fantastic deals there, and we're able to help navigate you that direction because there are some, again, real hidden gems out there. And then our topic of discussion today, Nashville and Clarksville, a fantastic market, low taxes. It's just a beautiful state overall, so much to do, so much expansion going on, and we're going to be going into detail, but we have our office in Nashville, in the downtown area, and then over in Clarksville, which is a really cute office on Lowe's Drive. Again, I spent a lot of time in our Clarksville office when I was out there all last week, and it's just great to see the team there and build a rapport with the property management team and the local realtors. So again, 2 beautiful offices in the Tennessee area. If you look up above, you'll see that Kentucky is highlighted. We do have a handful of properties that we manage in Oak Grove and Hopkinsville, and that's why we have that state highlighted as well. Our furthest property from our office in Clarksville in Kentucky is about a 20-minute drive, and that's, so we'll take on properties in Kentucky. We're not seeing too many deals on the purchase side there, but we will onboard and manage properties in that area as well. And then our Cape Coral office in Florida. I want to take a minute before I flip on to the next slide. This is our team here, but there are currently some storms going on in Clarksville, and we're checking in with the team to make sure everything is okay. But if you're following the news, you'll notice that there's some pretty heavy weather out there. And I think, Wade, you're getting a little taste of that right now.
Yeah, we're getting intermittent. We'll have some rain, thunder showers, but it's pretty calm right now at this point.
Yeah, and that's usual out there, but it's just an interesting thing because we are broadcasting on this yeah, funny enough, market today, and we're getting some weather out there, so it's to be expected, and it happens all the time, and it's been going on for decades in Tennessee. The market has proven to be tried and true, however, and continues to appreciate, which is wonderful. So just wanted to address that today because I was looking at the news and saw that these storms were going on. So we're praying for our team out there and all of our properties under management and just everyone in the area. So really exciting slide here. These pictures are taken during our Christmas parties right after we get the team together and we all grab company photos. So these are all our markets here. Starting at the top left is our New Braunfels office with the big blue sign. On the top right, we have our San Antonio team. Bottom left, we have our Florida team. Right in the middle there, we have our Newport Beach office. So that's our headquarters. We have our accounting department, HR, private lending team is all run out of Newport, and then our Clarksville office. So we're not in these markets by accident. There's a lot of research and back-end work that is done to determine where we choose to take our clients. So we're looking for these 7 factors when determining where to invest in real estate. And it's a good rule of thumb to use just whenever you're looking to invest out of state. You also want to make sure that you're partnered with a good property manager or realtor who is able to get things done in these areas. So we look for a stable job market. It must have stable employment, with unemployment being under the national average. All that information can be found on sites like the Fed's website or just a common ChatGPT search. So you're always able to Google the unemployment rate nationally, and it fluctuates, quarter to quarter, they'll update. You want to make sure that vacancy is low, meaning there needs to be strong demand for rental housing. So it's one thing to find an inexpensive property in, say, a state like Idaho, but you purchase it, you want to be able to make sure you can rent it as an investor. So we're really looking for low vacancy rate in these markets. We're looking for economic diversity. Meaning it's not reliant upon one employer. We want to see several sectors in the area, such as government. We want to see education, manufacturing, tech, healthcare, so on and so forth. All of our markets have really heavy military presence, which is a great thing. A lot of our offices have really big military bases on them, or very close by to them. So we're getting a lot of military tenants. So just economic diversity in general. We still want to see housing affordability. It is a little bit different here in California for those of you who are familiar with this market and how difficult it is to get into an investment property and make it make sense. Our markets like Tennessee, Texas, and Florida, there's typically lower entry level and a lot of space for appreciation long term. So affordable housing, we want to make sure it's landlord friendly. Same with California, definitely a tenant friendly state. Our markets outside of that, Texas, Tennessee, Florida, very landlord friendly. We want to see strong education because that turns into white collar jobs. That gives us a great base for stable tenants, higher salaries, and it gives us the ability to increase rents. And you want to see reliable property management, right? One of the most important. So we happen to provide property management in all of our markets, but there should also be competing firms. So you as the investor are not reliant on one property management company. You can go in, search on Yelp, look at Google reviews, and as the consumer, make your decision after you thoroughly vet different property management companies. Some markets are monopoly markets for property managers, and there's one property manager who's been there for 30 years and it's, their way or the highway. You want to make sure you have options. So making sure that where you're investing meets all of these points is super important. And we educate our clients on that up front. Kind of jumping into Tennessee here. This is a screenshot, a dot plot, and it just looks like a bunch of properties on the map, but we have just over 450 properties under management in both Clarksville and Nashville. So our Nashville office is growing. Our Clarksville office has increased significantly just over this year, and it is, very stable. As you can see, we've just now started to grow our pins there in Nashville, and we're constantly onboarding. I speak to all kinds of owners who call us and want to start onboarding, and we're selling properties and eventually getting them under management. So a lot of growth in Nashville for our property management team. And this is a doc that looks a little bit more clear when you have the full screen in front of you and you can zoom into each specific rather than a zoomed out screenshot. So there are about 450 pins, give or take, on this plot here. And it just goes to show our knowledge for the area. This is generally where we're managing, so we won't manage outside of our, where we know and where we're able to get our vendors and our crew. We're just keeping in these regions here.
Mm-hmm.
Really, really cool. 4 years in a row, our Clarksville office and Nashville, that same staff is managing our Nashville portfolio, has won Clarksville's best for real estate and property management, which is fantastic. So our team out there is super tight knit and they are just amazing at what they do. They have smiles on their faces. Like I was saying, I was out there all week last week and it was just a pleasure to be out there with them. They have such great systems and just do a great job, and it shows in our reviews. It shows in our, communication with our owners and our tenants being happy, being where they're at. So this is a super huge thing, is goes to show that it's important to select a property manager. So we're going to be talking about the real estate and property, or the real estate and investment opportunities, but then who's going to manage them for you, and who's going to handle the day-to-day communications, the maintenance, and making sure is upright. You want a property manager who is competent and knows what they're doing. So our Clarksville office has received this 4 years in a row. We're super proud to present this and showcase this, because a lot of hard work goes into that. Being that I was directly involved in the property management space here in California, I know what kind of work it takes to manage properties. So this is always a super great accomplishment, and we're looking forward to getting it again next year. Wow. With all that, I'm going to pass it over to Wade Wright. Wade and I met here in California, and he'll tell you about his history just in California and go over his slides, but super great guy to be around, and I love working with him. He and I have built this great chemistry, and it shows in our ability to just find our clients fantastic properties and, you know, turn and put them into property management. But Wade, thanks so much for being on, and yeah, please take it away.
Also, it's always a pleasure, buddy. Appreciate you. Great seeing you last week. Yeah, so I am a native Californian. My wife and I both grew up in Southern California, Orange County specifically. And we recently made that move to Central Tennessee. We absolutely love it. We're both outdoor people. We have had horses for over 20 years. I did some competitive team roping, and I'm also a former pilot, Tasso, so that's good. We have something else in common, friend. That's wonderful. But I've been in the business for 37 years. I had hair when I started, and I love what I do. I've helped over 1,200 people with their wealth building principles, and active investor myself. I've had transactions like Tasso. I've had transactions in other states. That's Alabama, California, Tennessee, and Texas. And my hobbies are fly fishing and playing drums.
Super cool hobbies, by the way.
Thanks. Love it. So I just want to point out, for those of you who may not know this, but the state of Tennessee is divided into 3 distinct regions, and you know, we call those the grand divisions. West Tennessee, you think of Memphis, that area. It's more like the river floodplain. Strong music heritage, a lot of blues, and obviously Elvis Presley and rock and roll. Its birth was around that region. Middle Tennessee, where I live, just a great geography with rolling hills and real fertile valleys. Very mixed economy with agriculture, manufacturing, strong service sector, IT, healthcare. We're seeing a lot of new industry coming into the area. And of course, everyone knows that this is Music City, the home of Nashville, state capital, and the heart of country music. The eastern section, we have the mountainous areas of the Smoky Mountains and the Appalachians, and you're going to see a lot of mining, manufacturing, and just beautiful, more of a mountainous region up in that area. So that star signifies Davidson County, and that is where Nashville is located, and that's about where I am. I'm about 12 minutes right now from the airport. So for anybody that likes history and have been out here in Tennessee, and you see those flags proudly waving with the 3 stars, that's exactly what it signifies, those the 3 regions that we just discussed. And they talk about that indissoluble trinity. Why buy within a major metropolitan area? Well, Tasso's done such a fantastic job just showing you the research that we have in our departments that actually focus on finding the right location in the first place by all those variables that he so eloquently discussed. We also look at investment areas based on a tenant base, more selection of property management like Tasso has shared with us. And we're also looking for markets that experience greater appreciation. As investors, we're either a cash flow investor, an appreciation investor, or a combination thereof. Diversification of employment and the higher chance of future population growth. And we'll go over those numbers in more detail now. Another benefit a lot of people fail to take into consideration is the economic benefits. Like they'll look at houses appreciate in various areas and they're like, well, gosh, there's a little negative cash flow. Well, this is where we rely heavily on tax professionals, and we look at the property's economic benefits as compared to buying stocks, right? We have houses that appreciate in value over time. The rents appreciate in value over time, and typically real estate will appreciate greater than inflation, all right? It's going to keep up with inflation. Leverage, like we use that example with stock, if you're going to purchase, say, $100,000 worth of stock, unless you're a margin investor with a lot of assets, typically you have to buy that stock dollar for dollar. Whereas real estate, which Tasso and I will share with you, you can leverage property with as little as 30% down in these areas and have a break even before you even take advantage of all these tax write-offs. The other one is the mortgage pay down. That tenant is over time paying the rent and paying down your mortgage. There is a return on that yield based on that. The tax benefits. We have depreciation on the building. In residential, it's 27.5 years is the life depreciation. Now, since the late 70s, there's been tax codes that enables you to accelerate that depreciation and taking the house in its various components and issuing lifespan on each one of those. For example, plumbing and electrical may have a 5-year tax life if you do one of these cost segregation studies and accelerate your depreciation. So there are some fantastic benefits with the depreciation on the building. And then of course we know the rental cash flow, the rents that are coming in every month. There are various types of investors, and Tasso and I would love for you to think about these 4 most common investors, and maybe even if you have a minute, just put it in the chat where you guys fall into this category. The first investor, and it's all usually based on risk tolerance or what type of return you're expecting to obtain, how much time you want to be involved in this, what is your time horizon for retirement. So our typical investor, the majority of the time, and I'd be really curious to see how this poll comes out, the core investor is someone that typically likes more of a lower risk. Their asset profile is they like high quality real estate, fully leased properties. We call them class A. There's typically A, B, C, and D class, A being the nicer home, nicer neighborhoods, better school system, newer. And so typically a core investor is going to look in that type of a market. They want the stable cash flows, no work needed, just keeping it simple. The second group that Tasso and I often find is these core plus investors. These are folks that may have a little more taste for a risk as long as the reward will overshadow that risk. And so you're seeing a lot of people looking for good quality properties that may need a little fix up. Little minor issues, what we call cosmetic repairs, some ways to improve the cash flow by maybe adding a garage or an additional bedroom. So that's the second class of investors.
Thanks, Wade.
You're welcome. The third type of investor, of course, is what we call a value add investor. And these are people that have more of a moderate to high risk level. They're looking for fixers, maybe operational efficiencies, maybe there was a lot of deferred maintenance. The prior owner just didn't care for the property. It may have been an older person, and they were collecting rents, and they may have even left the rents low on purpose because they didn't want to do the work. They didn't want to disturb the tenants. They just want to leave life as it was. Well, there's a lot of upside potential with that. And we're seeing a lot of partially vacant apartment complexes or up and coming neighborhoods that the gentrification is taking place. Very common. The last one is the opportunistic investor. These are folks that say the dirtier, the uglier, the better. You know, nothing scares us, whether it needs major, foundation issues, or we even need to tear it down and start all over because we can buy the land at such a great price. Distressed properties, they might go into an area where it's in foreclosure. So it's usually the higher the risk, the higher the reward, and vice versa. Is there anybody that's checked in on us and give us an idea of what their risk level is, Tasso?
I'm curious to see if there are people who, we have a lot of questions that have come in, and we're going to take some time to answer them kind of in the middle here. But I'm curious to know if you guys want to leave some comments on Wade's question to see if there are any, and we'll go back to the slide. Preference wise, value add, opportunistic, core, or core plus, just based on Wade's. We're seeing a couple core plus, value add, absolutely. Thank you.
Excellent.
Got a couple comments. Real cool. We'll just continue on here.
Thank you. I do have a couple properties for those individuals if they're interested. So why are so many people moving here? I mean, this is great. I love talking about this. We have 4 distinct seasons. Nashville's a fun town. My goodness, if you guys come out here on spring and summertime, they call it the bachelorette capital of the world. You know, it's just, you know what I'm talking about, right, Tasso? Was it crazy when you were out here?
I spent some time on Broadway on Thursday, just reasonable hours. I didn't go too, late or anything, but I was very surprised with the amount of people that were out having a good time.
Yeah.
Just very nice. And one thing I noticed is when you're in Tennessee, I'm a California native as well, but it's so people are just engaged and stop to say hello, and it's just you get that super southern feel, and I love it, and I look forward to continually visiting. But essentially, it's a great time. People are friendly. The scene is beautiful. The restaurants are great. You see, when we attended our networking events, hardworking young individuals, really just trying to make it happen and doing a good job and getting it in at affordable prices, So it feels like when you're out there, there's still opportunity for like the younger generation to get in, work really hard and buy a house because it's priced at a reasonable level. So, we're driving through the neighborhood, seeing young couples, working class, just making it happen. And it's beautiful, and you get a little taste of that. And, I think a lot of people are understanding that that's achievable in states like Tennessee, where you can still get that city life and you can kind of keep it a little country as well. So that's what I noticed firsthand when being out there. And I had the pleasure of, going with Scott, our VP, and Allison, and hanging out with the team and Wade. And it's just great to see how fantastic of a market and a place it is. So,
it's wonderful.
Just to what you're saying.
You're saying that, you're like, man, I love this place. So that's great.
Yeah.
You have a booming economy, as you mentioned, friendly people, the churches. My wife and I just have the church families just really brought us in, and we have potlucks with our neighbors. I mean, just stuff I never did when I was in California. It's amazing how friendly they all are. Of course, we have no state income tax with like a few other states, very low cost of living in comparison to other parts of the nation. Great entertainment. My goodness, 7 days a week, you can find some venue, whether it's free or paid ticket to be in front row seats. It's all there. Yeah. Beautiful countrysides. As I mentioned, we're horse people, so we enjoy the outdoors with the horses. And there's plenty of water. We have over 50 inches a year of rain, so there's always water here.
Plush green trees that are well watered from all the rain.
Absolutely.
I feel kind of silly for asking this, Wade, but what is the freeway that connects Clarksville and Nashville? Is it it's not 24. The 10, the 24? That drive 24 is green trees.
Oh, isn't that beautiful?
Yeah, it's a great drive.
Yeah, when you have a median lane there with trees in it and grass, it's groomed and mowed, it's a different look. You're like, wow, that's at the center between two directions of a highway.
Yeah, totally. Cool.
So why is Nashville a hotbed for real estate investment? Well, we talked about the unique blend of growth, livability, and opportunity, but let's just take a look at the statistics here. Nashville has grown to over 2.1 million people now, and exactly what you were alluding to earlier, Tasso, the median age is 37, so you have these young families that are coming in here growing because it's affordable. Median household income is $84,685. That's 10% above the national average. And the home ownership rate is high at 65%. And our median home price is $421,500, and a super low unemployment rate, 2.9%.
Yeah, I think I saw we had a market update from our lender today, Reed Hazard, and I think he mentioned that the unemployment rate nationwide right now is 2.9, right?
It's just fantastic.
Yeah,
Yeah,
so it's along the average. It's not lower than the average, but that constantly fluctuates. So what's good is it's not over the national average, and I think that's a statistic you could look up right away. And I was just doing research on it this morning. Is
right.
yeah, the unemployment rate right now is right in line with the national
Yeah,
unemployment.
yeah, the economy's doing real well right now. So what is the sector of employment here in Middle Tennessee? Well, the greatest percentage, of course, is in the professional, scientific, and technical services. Second would be private education and health services, great hospitals, manufacturing, wholesale trade, then leisure and hospitality, a lot of government, retail, information technology. We're seeing new information technology companies popping up everywhere along the freeway, mining, logging, and construction, transportation, warehouse, utilities, and then finally the financial services. As we look at rankings, this is a new ranking here. This year, we were rated #1 in the United States for the best real estate market by city size. We've ranked #2 for highly skilled tech workers. We've ranked #3 for metro and economic strength. And we ranked as the 6th most stable real estate market in the United States. I think Austin, Texas was one that was pretty stable up until recently as we've seen rents slow down and prices have slowed down in that region, but very, very stable market. This is information that Tasso and I arrived from our National Association of Realtors, the Nashonomics Economic Forum that we just attended last Friday, so it's all fresh data. I thought it was very interesting that Tennessee added 76,000 new people into the state last year and increased their population by 1.1%. And we're seeing as a whole from the last 5 years, Tennessee population has increased 7.7%. That's the area in the blue there, darker blue. Some of the other areas like Florida, Texas did a little better, but you can see now Tennessee is just stable, growing on a stable rate. Major employers, we have Nissan, Amazon, Ascension St. Thomas, Bridgestone, Oracle, Mitsubishi Motors, Vanderbilt University has a huge presence out here. And recently, Tasso, our California In-N-Out Burgers just moved their headquarters here to Franklin, Tennessee, which is a beautiful area. It's just south of Nashville.
It's been really cool to see In-N-Out expand over the years. I remember going to Utah. I went on a trip to Utah not too long ago, and I think there was a brand new In-N-Out, one of the first in Utah, and that was the first experience I've had at an In-N-Out outside of California. And I know it's their headquarters. I'm not sure if they're opening like stores out there, but really cool to see that their headquarters are going that direction.
Yeah, I heard they brought 200 employees with them.
Wow. Yeah.
So we're seeing the state home price appreciation over the last 5 years. It appreciated at 67.8%. So a very strong appreciation rate over the last 5 years.
Mm-hmm.
And
before, this is a great one, but wow. Price appreciation from 2020 to 24. Let's just take another look at that.
Yeah, I know.
Yeah.
It's so impressive.
Mm-hmm.
And for those of you that are football fans, we have a brand new stadium being built. It should be completed by the end of next year, and it'll host concerts and hopefully the Super Bowl now that we have the first round draft choice. We have a great new quarterback with great hopes that he'll bring us to at least the playoffs. If we look at the market overview right now, so we know that just the last 2 slides, it showed us that the Middle Tennessee 5-year appreciation rate was 67.8%. and it has outperformed the rest of the state of Tennessee, which is right now, the last 5 years, it's showing 61.3%. The average rent in Middle Tennessee is $2,700. We'll see the median will be half above and half below, but it will be a little lower number. But just taking on average, large homes, small homes, on average, the rents are about $2,700. And then we look at these investment opportunities, and we always take a data-driven approach. We'll compare the market, and then we bring these opportunities to investors seeking high appreciation rates. Areas that I have really focused in on, being an investor myself for over 20 years. I like Clarksville, we'll talk about it, White House, Lebanon, Murfreesboro, Spring Hill, and Columbia. The furthest one from location from Nashville is Clarksville, and that's anywhere, depending on traffic and how heavy your foot is, about roughly 45 minutes to an hour drive time. Everything else is going to be typically about a 30 to 35 minute commute, depending on whether or not you're going during traffic hour or not. So when Tasso and I are analyzing these markets, and our research department at Marshall Reddick is analyzing markets, we're always looking at the metrics. First and foremost, appreciation. What is that 5-year growth cycle? What are the annual rates, and what has been the most recent performance based on the market itself? Then we'll look at the property valuation. We'll go into a specific neighborhood. We'll look at the median values, the rental income, existing and potential rents, because there is a difference between the potential rents and what maybe a landlord that hasn't raised rents for some time. And then we'll look at the market efficiencies. What's the sale to list price ratio, and how many days has it been on the market? You'll see the metrics. People are looking for sales to list price ratio below 15 as kind of one of those benchmark rules of thumb. But we'll talk about a lot more of this in detail, and we'll also go into it if anybody would like a free consultation. We'll get into the metrics of each property and each location. So as we look at the investment opportunity comparison of those cities that I have selected, Clarksville is showing the highest appreciation rate and the lowest entry point, so lower priced homes. Spring Hill location is more of a premium location, and it's going to be the best annual returns. Murfreesboro, very young, growing, family-oriented region, balanced growth, quick sales. And then Nashville, of course, it's infamous for its urban premium, walk to everything, high rents. It's going to be more of a appreciation area, more so than the cash flow. Lebanon, and that's how we pronounce it, Lebanon, not Lebanon. That's known for rapid suburban expansion, and very importantly is the proximity to the freeway and the airport. White House, great up and coming area. It's a very strategic location, also along another highway. Strong school systems, low crimes. We've seen a lot of families moving in there, and with the high rents to the lower priced homes, it makes it a very investor friendly location. And next is Columbia. We're seeing a very fast appreciation rate in that area and low entry costs as well. So the projected population for the end of this year, Clarksville is expected to be about 188,000, a 2.2% annual growth over this last year. Murfreesboro, 171, 599, 1.9% growth. And look at White House. It's a small little area, but look at the annual growth rate, 5.9%. Same with Lebanon. About 56,000, more of a medium-sized city, large city, if you look at it on a map, but 8.9% annual growth. Unbelievable. Spring Hill, 61,000 people, 2.9%. Nashville, of course, the largest region, 686,000 people, and it's kind of peaked out right now. So I think more people now are moving out more to the country where it's more affordable and buying their home instead of renting. And then Columbia, of course, about 51,000 people and a 3.7% annual growth rate. So as I look at these value opportunities, look at Clarksville's 5-year growth, 113.3%, just astounding. The highest region appreciation rate, 7.9% annual appreciation over 5 years. 5 years in a row now. Median value, 310,784, definitely the most affordable. Sales to list price ratio, it's just, they list them and they're sold just right around the asking price. We are starting to see the days on market creep up a little bit. So if I was to guess, I would forecast that there'll be a little bit of negotiation on those prices toward the end of the year, but I could be wrong. I'm just trying to procrastinate, I'm prognosticating into the future based on seeing supply and demand measures. Spring value, its value opportunity is a 54.20, 5-year growth, annual growth rate of 11.48%. Just unbelievable.
Sorry, did I go dark there?
Went dark for a minute.
Give me a second here. Okay.
Any comments? Anybody want to ask a question while you're?
Couple of comments. I'm seeing one here while I get this back up. Wanting to know a little bit more about Franklin. I don't know if we included that in our slide deck before, but as I get this kind of back up and running,
Franklin is a spectacular area. Okay, Franklin, Brentwood, Belmead, these are prestigious areas. These were people that leave Orange County, California, and put $1.5 million in their pocket from the sale of their home that they paid $180,000 for, and they go into an area with great infrastructure, and it feels like Irvine or Southern California. Areas where they know they would have their Trader Joe's, their Targets, their great restaurants. They want those accoutrements, if you will, in those areas. You're going to pay the price for that because of the people from all over Southern California that flocked into that area and didn't care about the price when there was a low supply and a huge demand. They were just outbidding others. So that price point's large. But is it a beautiful area? Yes. Is it my favorite to invest for cash flow? No. But if you want appreciation and you're a long-term hold investor, I say absolutely. Let's go find you a great investment property and know that it's going to not give you the monthly yield, but it's going to give you the internal rate of return you're looking for at the end of your hold period. Just another approach. And neither one is worse or better than the other. Everybody has their own appetite and desires, and that's what Tasso and I are here for in the free consultation, to help guide you and direct you.
And Jess, thank you so much for all these great questions. I have a bunch from you. I will absolutely reach out to you in a private consultation to go over all these. We'll touch on a couple of them. I'm just getting this back to our main screen. We have a great question from Sharana. Is Nashville saturated? Costs seem already high. Do we anticipate more in appreciation? Wait, I'll let you take a little bit on that.
That's a great question, and that's really one of the questions that one of the audience posed to the economists local to the area. They are more optimistic than I am, and they're the experts, so I'd probably listen to them more than I would me. They feel that with the jobs, they're following jobs so closely, and the growth that's coming in there, they don't see a glut, if you will. If there is any adjustment on prices, they would say it's all based on interest rates. The people that have the lower interest rate, typically they tend to stick around longer because they don't want to give up that low interest rate. But eventually, where life events happen, whether it's death, divorce, job transfer, what have you, they'll give up that low interest rate loan. I mean, I think the statistics were that 87% of all people out there today that have a mortgage, it's 5% or below, and we know the market today is, closer to the 7% mark. So it's hard to give that up, but people will for the right reason. So we go back into the Spring Hill value opportunity. The median price is a little bit higher than some of those outside areas because just exactly what the viewer was asking. It's closer to Franklin and Brentwood markets, so it's going to command a higher price. The sale to list price ratio is 99.1, so it's selling very close to the asking price, and their market time is 34 days.
Thank you. Just want to make sure everybody can see our slides now. I went dark and brought them back up. Could you leave some comments making sure that we're able to view the slides here? Thank you. Thank you. We're good to go, Wade.
Okay, thank you. Murfreesboro, we spoke about earlier, that has an 82.3% appreciation rate over the last 5 years, which equates to 12.8% a year. Their median price is a little lower, 409,773, strong mid-range market. And what I also love about this market is look at how high the rents are compared to the price. So it's a 2063 is the average rent. So you get solid returns and it quickly sell. 35 days on the market, high demand area. And just to kind of give you an idea where that Murfreesboro location is there, you can see it down below. It's southeast of Nashville, about 35 minutes. It's home to Middle Tennessee State University. You know, we have 2 large universities in the area, and this is one of them, 20,000 students. And about 9.6% single family home median price appreciation rate over the last 10 years. That I love. I think that's a great number because everybody is tracking 5-year and 1-year appreciation. It's not often that you'll see TASO that they go out a full 10 years, and there it just tells you how solid the growth has been. As we go to the Nashville urban market itself, we've seen a 60.9% 5-year growth, which is a stable 10% annual appreciation rate. Our median price range, you see that's a lot lower than the average price. It's at $470,200. And the average rents are $26.25, highest rental income potential. Days on market's a little longer. As you can see, the higher prices, you know, causing it to take a little longer to sell, 49 days.
Yeah.
And then we go to Lebanon. That's just shown an 81% 5-year growth, 12.6% annual appreciation rate, price point $429,900, and a 99.3% list to sales price ratio, minimum negotiating room. They're coming off the market pretty quickly, 42 days. And what we like about Lebanon is the suburban expansion, affordability. You know, it's close enough to Nashville, but far enough out to where people can get more home for the money. You've got a great infrastructure. You have the main highway 140 there that runs right directly to the airport. And Amazon's fulfillment center has been stationed there now. So it's a great manufacturing sector, and you're starting to see small businesses landing around that location as well. So there's a high demand due to the commuter-friendly location, close to the airport, close to downtown Nashville, and just a growing job base in that area. White House, great little sleeper town. 82.3% 5-year growth, a 16.4% annual appreciation rate, 386,022. You know, it's low price point like Clarksville. Median sales price 384, median list price 415. So you see that they're selling. There's a little more negotiating there on the price, is what that tells me. But look at the short turnaround, 29 days on the market. So the location, again, another strategic location. You have that I-65 corridor that runs there. It's 30 minutes from Nashville. Great school systems, low crime rates, steady growth, investor friendly. It's what's attracting people. And then this should be our last one, I believe, Columbia. They're showing a 10.9% appreciation rate year over year. What's interesting is from January till now, it showed 7.4% increase. I'm going to guess that that's going to slow down as we move into the second half of the year. But look at their median home price values, $356,908, very affordable, up 1.6% from last year. Strong, moderately priced market, and the average rents are about $1,800 a month. So good, solid returns. It's affordable. 30 days, your average market time, quick sales, and high demand. Just some more details. As you can see, it's on the southwest section of Nashville there, and it attracts a lot of tourism, small businesses. The Nissan plant is nearby, so that's bringing in a lot of the economy. growing art scene, which is so unique to that area. There's a lot of artists that like that location. And again, low entry costs, much more affordable than the Nashville downtown area.
Wow. All right, Wade, that was amazing and really detailed on all the metros and little suburbs outside of the major metro in Nashville. So I'm glad we were able to take some time to look at all of those little pockets and how they're unique. We have options here at Marshall Reddick to essentially give our investors a break on the interest rate, which essentially help our properties cash flow. So this is a slide that we included to bring up our partnership with CMG Mortgage and Reed Hazard at CMG.
Great guy.
Absolutely. Yeah.
Yeah.
So what we're able to achieve is 10-6 arms and 30-year terms for financing options and accomplish rate buy downs on some of these properties that we're going to show you right now. We're going to go into detail on the pro formas with a standard interest rate at the moment. And essentially what happens is when we go in depth and get to know exactly what you're looking for and help navigate you to suburbs or metros in the Nashville area to help accomplish these goals, we'll get you connected with our preferred lender, Reed Hazard at CMG, to see what kind of rate buy down option we have. So we're going to go into some pro formas here, some property picks that Wade and I selected, and we're going to just look at the generic breakdown before these rates kind of are fixed.
And before you do that, I can just make a quick comment. That 10-6 arm, to the viewers, for those that are not familiar with it, what's beautiful about this program is that essentially with certain sellers, we can buy down the interest rate on an average of maybe 2% lower than what the market is, which gives the average investor about another $500 a month in cash flow. And this 10-6, what that stands for is it's fixed for 10 years. After the 10th year, then it goes into a 6-month arm, an adjustable rate mortgage. So that means your payments could go up, down, or could stay the same. But we have learned, Tazo and I have learned that most of our investors are on a 10-year hold strategy. And so it fits really well. And let's hope that the rates go down between now and the next 10 years. You can always refinance. There's no prepayment penalty. Just a fantastic program. I just wanted to point that out, Tazo.
Thank you. So we're going to just touch on a couple of our new construction opportunities around Nashville, Tennessee. So Wade, I'm going to have you break these down, but I'd just like to run through these pro formas in general and just kind of go line item and line item. So I'll take the first one here on Land Breeze Drive, and we had the pleasure of touring this beautiful community when I was out there recently. So we start with the list price. This is a little bit higher on the list price scale. We're always structuring our pro formas with a 30% down. Initial repair cost, we're estimating about $3,000. Closing costs, we always factor in at about 2.1. So initial investment capital needed on this property would be about $146,804. We have run comps on these properties and determined that 4 bed, 3 bath, just sitting at about 2,250 square feet, comps out at $2,700 a month in rent. That's what we're able to get lease-wise when we put this property up for rent after we have completed the purchase transaction. Your mortgage payment with that 6.5 is looking just right around $1,982.12. Taxes are equating to about $238.75 a month. Insurance about $116.67. So just roughly, I saw a question, what does insurance look like in the state of Tennessee? This is going to give you a rough estimate on what insurance would look like on a property like this. HOA fee in this community happens to be $50. Utilities and landscaping are translated over to the tenant they're responsible. So without a rate buy down on this property, you are cash flowing before fixed expenses, $88.90, a little bit less of a cash flow opportunity here, but we haven't even incorporated the rate buy down on this, right? So, and then we factor in obviously 8%, very conservative figure that we use, 8% maintenance and 8% vacancy. making this a negative cash flow. The good thing about these new constructions and us being professional property managers is that we're ultimately working very hard to get the property rented as soon as possible to really deduct from that 8%. And the maintenance is kind of not there, being that this is a new construction property and builder warranties come into effect with any major maintenance items that arise in the tenant's stay. So we're ultimately removing those altogether in the first year, because you're getting your property rented quickly if you take the pricing from the comps. And essentially same goes with the maintenance. You have that builder warranty that covers most maintenance items in the property. So we have our projected profit that ties into the appreciation trends in the market and our annual return on investment. To kind of surface on the left side, so this is estimated to appreciate at 5%. This is an A-class property in our Nashville market, single family, as you can see. New build in 2025, just recently completed, 4-bed, 3-bath. You'll see a lot of 3-2s on our presentations. This is definitely more of a luxury to A-class play with a little bit extra space and an extra bed bathroom. Huge lot at 8,712, living area of, like I mentioned, about 2,200, just over. So price per square foot is about 198.40.
That's good. Yeah, that price per square foot is very good.
Wait, do you want to touch on this one on Snow Ave?
Sure. No, I appreciate it. You know, it's listed at $399. This is right in downtown Nashville area. It's a smaller house. It's 1,400 square feet, but it'd make a great rental. This does not have a garage, but it does have a nice yard. That's very common in a lot of these areas. They'll find infill and they won't put in the garage because most people are just kind of commuting, walking. You know, we have great train system throughout these areas as well that we discussed earlier. But yeah, it's brand new. You know, these are all very good opportunities for somebody depending on their budget, you know, what they have. When you look at a down payment of $119,000, you know, that's 30% of the investment. Where else? I mean, I don't know about you, but Tasso, what's your average sales price now? About $1.5 million, $1.7 million?
Just about. I have a listing in Laguna Niguel, $1.5 million, and we're seeing things average out over $1 million in Orange County. So
yeah. So what is that? That's 450,000 versus 119,000 for your down payment, you know.
Very tricky to do any sort of investment here at that price point in Orange County unless you're coming in with a huge cash down payment, right? Or going all cash into the deal. Yeah, it's very tricky. So achievable numbers is what's good. Steady appreciation. Properties that are not going to experience a lot of maintenance and that will continue to have high quality tenants is what we're looking at here. Sometimes people look at these cash returns and get slightly turned off because they're looking for higher cash flow. That is achievable when we bring that rate buy down into effect and your interest rate goes down to 5.5, a whole point under, or you know, when we speak with Reed and look at what kind of rate you're able to accomplish with it, you know, based on what you're putting down and credit history, he'll be able to help you so we can further analyze these deals. So, you know, factoring this section in, the mortgage payment section 6.5, that's often able to be adjusted with these. Hi, Chris. The leasing fee for these properties are 50% of 1 month's rent. I just saw that pop up real quick, and I have a lot of questions coming in that we'll try to answer here. But the leasing fee for these properties is 50% of 1 month's rent. And what goes into that is that you're assigned a dedicated leasing agent who is calling and screening every tenant before they even enter the home. So as we that's a whole question. It goes a lot deeper, and we can take some time to talk about that. But the fee is 50% of 1 month's rent. You're getting a dedicated leasing agent who is present at every showing, screening tenants beforehand, actually getting on the phone with them, getting to know a little bit about them, where they're moving from, purpose for their move, and just spending a lot of time on making sure that you place a good quality tenant. Standard rate is just about 1 month's rent. So one example.
We do have small other markets, you know, these tertiary markets, we can have homes at 310,000, you know, 345, you know, there's all different price points based on rent and what the customer needs. You know, we can tailor that home area to them.
Absolutely. And that's why a consultation is so important, because these are standard and we're able to kind of find exactly what you're looking for. So this is one in Lebanon that you were talking about, Wade. Take us through this performance a little bit.
It's just a great builder. They're very cooperative. They're well-built homes. It's 3 bedrooms, 2 baths, single level. There's always a great demand for that. It's a little larger than some of the other ones. It's over 1,600 square feet. Great location. It's going to rent quickly. It's not going to be sitting vacant. These properties are going to rent rather fast. They really are. Just a nice home. I want to be respectful to the viewers. It's 8:04 right now. I know we're starting to go a little bit over.
We'll hop this next one here and close out. We appreciate you guys being on here.
Yeah.
But one in Lebanon, and real quick, we'll kind of touch on it you're looking at a little bit of a higher monthly income here because the rents are higher. So it's looking really good. We're also seeing tax.
Observation, Tasa. Yeah, that area is going to have higher rents, so you're going to have a better cash flow.
Yeah, so it's important to factor all these things when choosing where to purchase. We're going to look at one more here in Madison, B class, a little bit smaller, 379, a little bit higher of a list given the area. Down payment still at 30%. Less square footage, as you can see there on the left side below B class, built in 2024, so a little bit of an older build, listed a little bit higher. Initial repair costs, we're quoting at about $1,000. It's a new build, you shouldn't have to do more, and that's mostly tailored to blinds and things of that nature. Blinds, sometimes refrigerator, washer, dryer. I'll have to check to see if this build comes, but that's when we consult and go through, we'll give the differences of all these properties and kind of give you the pros and cons of each different development if you're looking to go.
Nice builder too, by the way. That's interesting that you chose that property. That it's Edenwold Center Homes. I mean, when you go in there, they look like they're like semi-custom, and the appointment, the interior, it's like, wow, why did the guys do this? It's going to be a rental. It's like beautiful. Raised panel doors, nice backsplash, granite countertops, upgraded appliances. They're really nice. But I'll hush up. I can go forever.
Yeah, totally. Here in Madison, you're typically looking at higher property prices, and then you're also turning around and getting a little bit more rent for them. Insurance is lower on this property, quoted at $100. Taxes coming in pretty low as well. Management fee obviously is 9% of 1 month's rent. HOA fee, there's no HOA in this community. Utilities and landscaping on the tenant. So that makes a difference. Is if you don't have an HOA in the community, you're saving $50 a month, which kind of helps out your monthly cash flow. So this one, after fixed expenses, breaking this down, is a $213 cash flow property. And we haven't even put in the interest rate, right? So we haven't even played with the interest rate and spoken to the lender to see what we're able to do about the forward commit and getting the interest rate lower. So estimated maintenance, we brought down on this one to 5%, and that's because this builder offers a lot more of a warranty than some of the other builders. So we'll consult with you and give you options on what this builder covers and what the benefits are of investing here. Every property has its pros and sometimes its cons. So you can see we're still factoring in conservatively at 8%, and then the leasing fee still being 50% of 1 month's rent.
Good job. You got through them, buddy.
Yeah, it was great performance, and those are just some options of the many that we have. And again, here are our fees clearly outlined that can be found on our website. And this is related to property management. So we have that lease renewal fee that comes up at the end of every year. We actually physically send a maintenance manager to go and take hundreds and hundreds of photos. Our property managers are rerunning comps. The tenant, a late fee that they get charged at the 6th, it's actually the 5th of the month at midnight gets implemented. That fee is split between Marshall Reddick and the owner. Leasing fee 50%, no setup fee, no maintenance coordination fee or eviction fee. And then our standard rates here, 9% for a single family. If you want to go bigger, your management fee kind of slightly decreases. More info can be found on our market data packets. 1 second here. We have plenty on each market that we're in. So our Nashville market data packet, I read on the plane over, it was great. And then I spent some time actually touring the market. So please take the time to look into the market data packet for Nashville. That can be found at our website, Market Data Packets in Tack Bay, Nashville. And if you're interested in learning more about our other markets, we have a lot of information. So please take some time to utilize those options and that education that we provide. What are customers saying? Our reviews are fantastic. And that's because our property management team really does care, and I think it shows in, you know, how our presence online. So take some time to look us up. Look up, you know, depending on your market, if you look up, it'll bring you to that market, but take some time to look outside. If you're in Newport or Orange County, take some time to look at our Nashville reviews. It's a newer market, so right now I think we have 12 5-star reviews, which is great. But if you Google like San Antonio, you'll be able to see all of our reviews there and what customers are saying. It's a great way to gauge what kind of service you'll get. So please feel free to take a look online. Please follow us and write a review if you're happy. If you're happy with the presentation, you can go ahead and share that, right, on our Yelp, on our Google. But we love to get you on as a client and then do some great work for you, and also have you leave us a review. But this is all the places that you can find us. So again, our Yelp is tied into each one of our markets. Our LinkedIn is great and constantly gives updates on our webinars and different events we're having. Sometimes we have some in-person events that go very well. Our Facebook, we have 16 meetup groups. Our Instagram and our YouTube, where you can find recordings of previous webinars and just other informational videos that we've created. What you can expect from a consultation with an advisor, and we'll really quickly run through this, is we're going to be going through your goal setting. We're going to evaluate options. So like Wade and I provided a couple of different builder listings. We're going to be going over the different areas that you can invest. Decide on a time frame. We're not pushy. We really have a lot to do, and we basically move how you want to move. We provide you all the information and let you sit with it and decide on if it's something you want to proceed with. So if it's something you want to do in 6 to 8 months, we're okay with that. We're able to work with that. If it's something you want to pull trigger on right away, we're able to move quick. So we'll decide on that time frame. We'll set your criteria. We're going to identify markets. We had a fantastic presentation on Nashville today, but we'll identify where your dollars make the most sense. And then we're going to introduce you to all the key players. For a consultation, you can reach out to myself. Oh, and we just kind of closed out there, so let's get back to this slide. And I can connect you with all of the agents in the markets. In the Nashville area, we'll be able to get on a consult with Wade and go deep into all of the cities we provided. But again, we want to thank you so much. We're over time here, so we will reach out to you each individually to answer your questions. But thank you so much for logging on. It's always a pleasure to present with you guys. With you, Wade, thank you so much for being on and giving all that useful information.
It's been an honor and a privilege. Always appreciate the time together, Tasso.
Yeah, likewise, Wade. And we're looking forward to seeing you all in the next one. Thank you so much.
Bye, everybody. Thanks for being patient with us and staying till the end. We appreciate it.
Yes, thank you so much.